out to those who are directly in, contact with this disease on a daily basis: the doctors, nurses, uh, first responders, even grocery store and department store workers that are out there hustling and trying to help us with our needs and putting themselves in a vulnerable situation in the process. So thank you guys for doing that. Also, thoughts and prayers go out to those who have lost their jobs or significant income from this. Guys, I think we've all been affected by this in some way, shape, or form, and that's kind of why we're here right now, doing what we're doing, because we're trying to figure out how we react in real estate investing world. And as a group, opportunity investors, we try to stay proactive. And I think the idea is, let's learn, let's get educated, let's see what's going on around us, and let's figure out how we can position ourselves to be successful moving forward. And so, guys, tonight, what we're going to be doing, we got some people joining us. We have, for property management tonight, we've got Macon Davis from Coastal Group. Actually, one of the guys that got me in real estate, son of a gun. We've got Robert Hill from Atlantic Bay. He's going to be talking to us about the mortgage lending side of things. And we've got Shawn Cowling, who is a flipper, rehabber, contractor, and also myself and Shawn Bowen. I'm going to be talking about real estate sales and kind of what I'm seeing, and Shawn's going to be talking about wholesaling. So, without any further ado, let's raise our glasses as we normally do in person for a quick toast. May your castle be secure and your cup overflowing. Cheers. How did the cling happen? Did you guys somehow cling virtually? Like, I don't know. All right, Shawn, you want to kind of get us started here?
Yeah, let's do it. So, guys, thanks for joining us. I appreciate you guys being on here. I'm just going to jump right into it. So, if you're in the wholesaling model or understanding what that is basically finding properties, getting them under contract, either taking them down yourself and or taking that paper and selling it for a profit. So currently in what I'm seeing or what we are seeing in the industry is a huge withdrawal, meaning guys that said they were wholesaling, they're disappearing. Guys that were supposedly buyers, they're disappearing. And this is the time where if you are in this industry and you know anything, I got back in 2010, which was at the bottom of the market. And this is kind of what it looked like then, right? Where people were pulling back and starting to come back. It slowly crept back, but man, this is the time where if you have marketing out or if you have the capabilities to market more, this is where the time is to make the push. Everybody's stuck at home. So it needs to be making the phone calls, having your systems and processes in play to where you're able to know your numbers, right? And then actually going in to help people for, a good reason. And not just because, we all understand that this thing is real, right? But I hear some guys out there right now talking about this is the time where they need to be pushing because of this. And you should sell your house because of this problem. That's not what we're trying to do, right? This should be where you're still helping people. And now more than ever, people are probably going to need that capital, right? So maybe some of those sellers that had a higher price in mind back in the day, maybe now have lowered that price because they need that more than their price that they thought they were going to get. So right now we're seeing where now is the time. If you do not have systems and processes in place, work on them and get them set up. Follow up is always a key to any business, but in this especially, follow up with those old leads, right? And set those appointments if you can. A lot of people aren't willing to, haven't pulled back so far yet, but a lot of people aren't willing to allow you into their home. So can you do a virtual setup? Can you do one of these Zoom calls? Can you do a face-to-face call? Can you do anything that allows you to just make a connection and see the property and do your numbers correctly to make that person an offer? So that's what we see in the wholesaling side of things. I've talked to a lot of people. I'm in different little mastermind groups where we talk to people across the country, and it's unanimous across the board. A lot of people have shut down, shut up, and are just like, don't know what to do. And like me and our group have talked about, this is where we're pushing forward, right? If we've got our pedal or our foot on the pedal at the moment with marketing, it's actually going a little harder to try to get more attention and just follow up. You know what I mean? That's the name of the game. So that's what we're seeing. I know we're kind of keeping ourselves to a time frame. I didn't time myself. So hopefully we're all right. But that's kind of where we're at and what we're seeing. So if anybody had any questions, fire away.
Yeah, guys, as we go along, go ahead and put your questions into Facebook Live. Vanessa and Ashley are going to be kind of fielding those as we go. And we're going to probably wait till after everybody kind of gives their spiel to address them. But go ahead and ask them now while they're top of mind. And we'll kind of filter through them and throw out all the really bad ones, even though there's no bad questions. But you know what I'm saying. All right. So Shawn Cowling, please step up. You're on mute.
There we go.
All right. So I'm Shawn Cowling. I have SC Cowling Contracting. I'm a general contractor, but also buy and flip homes for myself. So kind of see all the aspects of it. First question was seeing the effects of the virus on my industry. It's not been too much yet. I've seen some changes where like I have not been going in Lowe's and Home Depot and stuff like that. I've just been trying to avoid that because I've seen people, a couple of times I went in there about 2 weeks ago, or in the beginning of last week, and nobody was social distancing. So just kind of have to watch yourself and stay away from people. So what ended up happening was people start placing a lot more deliveries. I've been working remotely, doing online ordering, stuff like that. And then as far as that goes, I haven't slowed down that much though, because my subs, everybody seems to still be working. I'm trying to separate them though, where I'll just have a couple guys in the house at a time, try to schedule around their working just so there's not, a whole bunch of people in there at one time. And it seems to be working. You just kind of change the schedule a little bit. I think it's slowing the process down just a tad, but not too much overall. It's just, yeah, I mean, you deal with it. It's one of those things that, like everything else, you just kind of deal with it. I see it slowing down a little bit as far as trying to find properties, like Bowen said. But I think if everybody keeps pushing, once this thing slows down, I think it'll ramp back up real quickly. So I myself am not going to stop looking. I'm going to keep, as soon as I sell, I usually have 2 projects at one time, and then I will just, I'm going to keep looking. I have a feeling, like he said, people are going to be willing to sell, maybe at a lower price. So might as well be me that tries to buy it. So between that and the contracting part, I'm still getting calls for other remodels and stuff like that. So again, that part hadn't really slowed down that I can see. People doing remodeling their own house. It seems like they're at home and wanting to do like screen porches, and maybe they're sitting around enough to realize what they want to do in their own house, maybe smaller projects and stuff like that. So that part of it, like I said, I hadn't seen really slow down. But flipping side, it just process a little slower. Again, one more thing I've seen, like planning departments, cities and municipalities and all that, obviously they're doing a lot of different stuff. So you have to just kind of got to be patient. A lot more advanced scheduling than, a few days more than you would be planning. But other than that, hopefully it doesn't last too long. And like I think, like Bowen said, it'll pop right back up, and people will keep on pushing. So that's my side of it, and I'm not sure who's next, but on to the next one.
All right, man. Thanks, Shawn. I appreciate it.
Yes, sir.
I believe Macon Davis from Coastal Group is going to tell us a little bit about property management side of things.
All right. My name is Macon Davis. As Alex might have mentioned earlier, I'm responsible for all of his success. I got him into real estate, and everything he does well is because of me. So there's that. But really, I in property management, I work for Coastal Group Inc. Realtors, manage approximately 400 properties, or 400 doors, I should say. I'm a realtor, manage the brokerage itself. And so what we see right now is just it's not a huge slowdown in what we do. Just like most downturns or economic issues that come across, people still have to rent property, and that never really changes. If interest rates go up or they fluctuate, people are still looking to rent property. So we're not seeing a huge hit there. We're still pretty steady, still pretty busy. It's affected us. It's affected us in different types of ways as far as just how we go about business. We can't actively show homes as frequently as we do, especially if they're occupied. The vendors, the contractors don't necessarily want to go into the properties right now with tenants there. They're all worried about the same thing and endangering one another. So that's really the main ways it's affected us. We're as far as our office and business as a whole, we're running a kind of a skeleton crew, staggering folks coming in. They don't have to come in, but they like to come in, and we just kind of do it here and there and make sure people aren't around each other as we should be social distancing. As far as like I said, the changes with the vendors, not a whole lot. They're still trying to make money, so we're still trying to give them business if we can, but we're trying to hold off on most things with repairs. I can only speak to, again, with the market and the economy, I can only speak to what I see, and I'll let Alex speak to the sales side when he comes, but we don't have much of a difference. The tenants, we were proactive with contacting tenants and owners and just advising, hey, if you can't pay the rent, we understand what's going on. Let us know how that's going to work for you. We'll work with you the best we can. And for the owners, just if you own property, if you're an investor, if you're renting your property out, whatever it may be, make sure you have reserves. Save your money. Don't depend on it, and don't feel like it's always going to be there. In times like this, you're going to need 1 month, 2 months rent. You may need extra money for repairs, and you don't have income coming in. So it's important that you do these things and maybe make sure you have insurances that cover losses of rent. Some do, some don't. Depends on the situation. So that those things are important. As far as any recommendations, I mean, that's really it. And of course, if you're investing in property, make sure that it's something that's rentable. We come across several properties where the numbers make sense when you invest, but the property itself isn't a great property. And we've got some out there now that we can't, in this time where it's slow, a little bit slower, we're having trouble re-renting them. And it's not that the property is bad or whatever the case may be, as far as, or I shouldn't say it's not that the time is bad because we're renting other properties. It's just the property itself, it's not a desirable one. So just make sure you have something where the numbers make sense and the property is a good property that's highly rentable or highly desirable. That's really all I would say right now for my spiel. If you have any questions, just let me know.
Thanks, Macon.
Yep.
Appreciate that. Robert, you want to go ahead and step in here? Oh, you're still muted.
There we go. Thank you. All right, guys. It'll probably be kind of like this scene from Old School where Will Ferrell just blacks out and passes the last minute exam because there is so much going on in the finance world. I don't even have the ability to scrape the surface of it. So I do have a bunch of, information, and everything is typed up and ready to basically go. So you are welcome to reach out to me, really to kind of get that in-depth look at what is going on. And If anybody can tell you, please give them my phone number so they can tell me, because we truthfully don't know. And so if anybody tells you and sends you down that path, well, this is going to happen and that's going to happen and these things are going to, we just extended, the stay in place, or the social distancing guidelines an additional month. So if we think we know what's going on with the virus, we have no idea what's going on with the market. So here's the couple of basics. Hopefully by now, the Fed interest rate going to zero, you guys have learned that that doesn't mean mortgages went to zero as well. And actually it has no impact whatsoever on it. There were a couple of things that were great that the Fed did do, and the intention was good, but unfortunately it actually unfolded to be a bad scenario where the Fed investing in mortgage-backed securities is really traditionally a very great thing for the market and for rates. In this particular case, we as lenders across the board were already at such a high volume. And so when the Fed actually does that and invests in MBSs or mortgage-backed securities, it helps to decrease the interest rate. Well, lenders were already underwater as it stood. And so the predominant issues came from volume and capacity, right? So you can only do but so much. And, there are plenty of, big lenders out there who have posts on their website that says, we can't help you for a little while. Just hang tight with us. We have some very high volume right now, and it's going to be a little bit before we get back to you if we can. I've heard that there's been some suspensions out there of products as well. And I don't say this to pick on anybody by any means. This is a difficult time. And the reality is the volume and capacity issues are slowing down everything. And when you have that much money hedged out there, you look at an additional issue brought in by the Fed buying MBSs. So what occurred is that you now have all of these margin calls, and that's point number 2. So you have one being volume and capacity issues to actually be able to clear your pipeline and close these loans so that you can refuel your credit lines so that you can continue to lend in the future. And then now you have the margin call. What is a margin call? So if you've ever had like a high yield savings account, right, where you have to keep a certain number of dollars in the account. But let's just say the account can't go below $2,500. Otherwise, you got to pay X number of penalties, right? The same thing is happening for mortgage lenders, servicers, anybody that's in the business, it's occurring. So that is creating a massive, massive financial bleed for these companies. And so therefore, the rates can't mirror where the market actually depicts it should be, because they're having to pay hundreds of millions, billions of dollars just because of a margin call. So their account went below X number of dollars. Therefore, they have all of these quote unquote penalties and fees. Again, significantly more complicated, but that's the biggest issue that's kind of keeping rates elevated beyond what we would think the charts show, right? So then let's talk a little bit about the industry. What is going on out there? I can really speak well to my company. I obviously, don't know the entirety of what everybody else is doing, but purchases are taking priority over refinances. So we're still operating on about 24-hour turn times for our purchases. So if you're in the market, let's do it. We can get it done. Rates are still a tricky thing, of course. And so what we're really advising people to do on that end of the spectrum is let's get it together, get your paperwork in, let's get you rolling, let's get you set up, because I can't tell you what's going to happen in an hour, let alone a month. And to kind of help put this into perspective, we'll open a day at rates at 3.25. We'll close the day at over 4%. We're talking 1+% swings in rate in one single day. The following day, we'll be right back the other direction. So we're begging and looking for stability in the market. And then what do we project long term, right? Well, one, rates are ridiculously low as they sit currently. We're talking probably mid 3s to 4-ish. Considering a 720 credit score or higher. And again, on the given day, I can't hold that true in every instance, but being prepared, being ready to go, it's still cheap money. It has been cheap money. It's just unfortunate that, okay, great, you missed the peak, right? You missed the 3%, but did you really miss it? And you'll never know when the peak occurred. So that from the industry perspective, there's 1,000 more things to go, but I got just a little bit of time here. So please, my contact information should be posted somewhere. Please call, chat, text, email, whatever the case may be. I'd be happy to help you guys out.
Thanks, man. Thanks.
Hey, ladies and gents, let me hop in here real quick. So we're still waiting on some questions to come in. So everybody out there in Facebook land, if you would, I know you got some great questions for these people. They're happy to sit here and answer them for you. But while you gen up those questions and while you drop them in the comments, kind of like to go around real quick in the spirit of opportunity and ask everybody what they're drinking.
Hold on.
Ladies and gents.
Wait a sec, Cameron.
Okay, what's up?
I still got to go.
My bad, Alex. 100%. There's the snafu. All right. If that's something that messes up all night,
Oh, good.
my bad.
Man. All good in the hood. Yes. Get those questions ready, please. Cameron, you got this, man. I'm glad you're on top of things.
I'm sorry, brother.
No, you're good. Well, I want to finish up just because I think with everything going on, there's a ton of stuff to pull in. So my perspective is super like direct. As a real estate sales agent, it's more kind of like a beat the streets, like be out there and see what's happening in that atmosphere. And so that's kind of what, I kind of wanted to share is kind of what I'm seeing like directly right now. So let me share this real quick. All right. So hold on. Boom. There we go. All right. So what's it looking like for us out here as real estate agents? Because I think we're kind of like the infantry of real estate, honestly. I got the fist bumps and hand sanitizer just because I'm trying to avoid handshaking, and it's tough for me. It's tough. I'm a people person. So elbows, working on it. The reality is, guys, with everything going on, everybody's talking about there's some negative things, there's some positive things, but the reality is there are a lot of buyers still out there. So I've listed 3 houses in March, and they've all sold in less than 3 days. One of those was prior to the coronavirus, and that was insane, like 6 or 7 offers and 10K over list. Now it's kind of getting a little bit more normalized, but people are still on houses that are priced correctly, seem to still be getting offers, multiple offers at list price within, a week, basically. So now I'm looking at this at a very micro level, but my goal today was to kind of share what I'm seeing like right now and then kind of forecast a little bit. So we've got a lot of buyers out there. Some agents have stopped showing, but I think I've only talked to one personally who has actually stopped showing. Everybody else on the sales side is still showing, because if I stop selling houses, I don't make any money. And if I stop showing somebody houses, they're probably going to go with somebody else to go see houses. So it's kind of a tough, it's tough to stop doing what you're doing if the government is saying you can still do it. I've seen some sellers taking homes off the market. It's usually people who are older. If there's tenants in the property, then I'm seeing them kind of take that off and be less welcoming to showing, which makes complete sense. And then, people who have kids, I've seen them take off a little bit. Mainly what I'm seeing is people put gloves and booties and hand sanitizer at the front of at the front door, so that you can actually go in there and kind of like, hey, please, be responsible. So people are still trying to sell. Loans are taking a little longer, although really they haven't been taking that much longer, because we've all, as agents, we've kind of been try to prepare to see what, our lenders if you work with good lenders, they're going to tell you, hey, this might take a little bit longer. So you set your contracts up a little bit different. So yeah, maybe our loans that would normally close in 30 days are closing in 45 days. That could all change, but right now things are still lining up the way they should. So that's not quite as crazy as we think. What I am seeing is kind of both parties and agents are working together really well, because a lot of leverage is lost on both sides when people are like, I don't know what the heck is going to happen in a month from now, but I know this guy wants to buy a house and this guy wants to sell a house. Let's just try to make this happen. So I think that's, that's the way this should work anyways. And when you have both parties working together, it's pretty awesome to do that kind of a deal. I'm seeing more of that, honestly. I'm seeing less people trying to just bend people over the knee and, whatever. And I'm seeing more people try to work together and actually accomplish what the end goal is, which is let's, make this happen. Let's get somebody to move into a house. Let's sell this house. So closings are still happening as well. I just talked to my closing attorney, Chris Pakta, today, who's a part of Hopportunity as well. And he's saying, we're keeping up with everything. We're ready. We got a plan B in place. But as for now, they're still closing in, in location. And they do e-filing. So Virginia Beach, Chesapeake, Norfolk all do e-filing. So they're able to keep up with, the records as they go on. So they've been able to keep up so far. I think Newport News and maybe Hampton are not doing e-filing. They literally have a box in front of the courthouse so you can file your paperwork, which is kind of awesome to think about. But either way, closings are still happening and they're not getting pushed back nearly as far as you think. A lot of people still want to buy. A lot of people still want to buy homes. So, as you look at this, it's opportunity versus, uncertainty. And so I kind of did some research to see where we're at. Because what I'm seeing is, what I'm seeing on a daily basis, but also where we want to be. Like, what's the projection? And of course, I do not have a crystal ball and I will not claim to have one. But what I think is happening right now. So February 2010, Shawn was just talking about this, right? That was a great time to buy. That's kind of the bottom of our market, right? We were at 223 median price. Now this is my matrix. This is Southern Hampton Roads. So mainly Chesapeake, Norfolk, Virginia Beach, Suffolk, and Portsmouth, if I didn't say that already. So February 2010 was 223. 2015 was 239, and now we're all the way up in 2020 to 270. Days on the market was 62, then 60 in 2015, and now in 2020, 31 days on the market. So what you'll see in our market is we've got a pretty natural progression of us going up, right? So we had a recession, and then we're scooting up in a pretty good direction. Not too crazy, and not too, but there is progression. And then what you'll see here is this is 2020. So I forgot to put the dates on this first median price, but it's January is 265, February is 270, and March is 279, right? So stuff starts kind of skyrocketing. And then the days on market just start going the opposite direction, which is good, right? That means that things are happening and competition is high. So 34 days, 31 days, and now in March, 22 days. Well, the thing is, stuff started going insane at the beginning of March, right? So stuff started getting, I think, too hyperinflated in March. And I think it would have been bad, honestly, if we'd have kept going in that direction. It'd probably been good for me as a real estate sales guy, but for the economy in general, I think it would have been almost too much inflation for Hampton Roads, where the prices would have gone up too high, and we would have had a 2006 in our hands. But what I think is actually happening is there's kind of this autocorrect going on right now, whereas we're kind of stabilizing a little bit. But because we had that little boost, I think it's kind of holding us out a little bit. So prices aren't dropping too low, whereas it's just killing the market. So I'm not saying like this is going to last forever in any shape or form, but what I'm saying is this might give us a little ability to sustain a little bit longer than maybe some other markets, and maybe a little bit longer than I thought maybe 2 weeks ago. because when I heard this was going on, I was pretty nervous, as almost everybody was. Luckily, as investors, we kind of prepare for these things, I think, a little bit. You know, the fact that a recession might come along, I think, was somewhat inevitable, but we don't want it to come along like tomorrow. So I think that super fast progression that we were having in 2020 helped us out so that we're not going to drop quite as far, quite as fast. The other things going on in the market. So what's hurting our market? Loans are getting stricter, right? So as Robert was talking about, like it's getting tougher for the lenders out there. So their criteria is going to go up, and it's going to make it harder for buyers who maybe shouldn't be buying in the first place right now, are going to have a tough time getting a loan. Less houses are on the market. It's pretty insanely competitive right now. There's not a very great inventory, and there's less and less because people are getting more and more scared to show their properties. Some people that can wait to buy or sell are waiting to buy or sell, right? If you have that option, it's like, well, why don't I wait to see what happens? The good thing is with that, is because we're still in March, early April, right? If this had happened in late summer, right? If this had started in late or like in June or May, I think it would be even more of a problem. So there's so many factors, but people are losing jobs, mean less buyers and nervous, right? We're talking about stricter criteria and about interest rates potentially going up. We're talking about all those things that Robert's getting into. If on the secondary market, they're not confident in these loans, these mortgage loans, the interest rates are going to start going up, right? It's going to be less competitive, so prices are going to get higher. So that's some things in the fear mindset, man. I think that's one of the biggest issues right now. But what's keeping us strong, and this is here in Hampton Roads, we've got military sellers and buyers. My last couple deals have been guys who are in the military. They're young, and they have confidence in the job that they have. They're looking at this as an opportunity to buy when other people are scared to buy. So like people are out there buying houses. I'm showing more houses than normal because guess what? When people get bored, you know what they do when they're home from work? They call me up and want me to show them houses. So yeah, social distancing when it's good for them, and then mostly they want to go, see houses. So but that's kind of the reality of it. There's lots of buyers still looking. There's a ton of buyers. There was a ton of buyers as we came into 2020. There's as many now. Will that go down? I think eventually, if we stay in this realm for a long time, I think it's going to go down. Low interest rates are helping us out. And like Robert said, guess what? 5% is low. The reality is interest rates at 4% are low. Interest rates at 5% are low. Most of our parents had interest rates in the teens. And so if we can keep interest rates under 6%, that's not necessarily what we strive for, but it's still pretty damn good. So I think, I think we've got some positive things going for us. My projection is that if we get out of this in a reasonable time, we still have the potential to, to not just drop out of the face of the earth here like people are getting scared with. Maybe I'm too optimistic, but I think our market, just because there's so many buyers out there. And the other thing that I did want to get into, 2006, right? Everybody bought a ton of houses, me included, at a super high price. Those people are now looking at the opportunity to sell for the first time in, 10 to 15 years. And they also realize that if we do hit a recession, they're not going to be able to sell for another 10 to 15 years. So those people, as soon as they have a little more confidence that this coronavirus is going to go away, I think they're going to start freaking offloading properties. And I work with Macon Davis with Coastal Group, and we've had a ton of owners start to try to unload those properties because they bought them in 06. They couldn't unload them for a really long time. Now they finally can. And guess what? They're not going to wait another 10 years to sell. They're going to sell now. So I think those things are going to help us hold the market out a little bit longer than maybe some other things in the economy. And also, I think Hampton Roads will ride out things a little longer because we've got that military, background. I think that is going to help us be a little more sustainable than some other markets. But sorry, I kind of blabbered on a really long time. But that's my sales side. Cameron, would you like to take it over, please? Thank you.
Yes, sir, I would. So we've had some, I'd like to thank everybody first, but we've had some questions come in. The first question is a two-part question for Robert. And the first part of the question, if you can follow this, Robert, is what if I want to refi out to free up some money for other purchases? So I have a current house. What if I want to refi out and clear up some money for other purchases? Should I jump on that now or wait and watch? And the second part of it is, I was speaking with my real estate attorney client of mine last week, and they were hearing that to help climb out of this coronavirus, the Fed is going to drop rates again. What are any of you hearing about that?
All right. Perfect. So a couple of really good things. Here's the deal. What you guys really need to focus on regarding, taking your money out is where are you happy at taking your money out, right? So we can do some very highly detailed analysis to find out, what is your overall repayment of said dollar figure, right? The other aspect of it is when you look at taking money out of your house and doing a cash out refinance, what are we going to do with it, right? So can you take out $100,000 to be able to buy 3 more properties that would in turn allow you to generate X number of dollars worth of revenue? Where are you at in your stage of life? So are you still young? You're going to work for another 30 years? Are you close to retirement? Should we maybe only buy 1 property and generate, $1,500 worth of income versus generating 3 properties that are essentially paying for themselves? But over the next 30 years, somebody's going to be putting $1,600 into your 401k every single month. I don't know an employer that would be willing to match that. But the bottom line is, if we can make the numbers make sense for your specific strategy, then that's what we need to go on. And so whether the time is to lock the interest rate now and today, unfortunately, it is an hour by hour change. So we need to find that threshold where you guys are comfortable and then measure out from there and saying, okay, well, hey, look, if we get within this target range, all right, say, hey, your target range is 3.75%. If we can get to between 3.5, obviously we're going to, pull the trigger right away. If we can get to 4, is that close enough? And does that warrant enough profitability for your strategy overall in order to be able to move forward, right? And then it's one of those things where when we do, and I'm sorry, I'm going to interject with kind of more of a long-term thing. Whenever we have a recession, and of course that's big time on the radar right now, we're always going to see rates decrease. But again, those 2 components that I talked about earlier regarding capacity issues and then again, margin calls are the biggest impacts as to where and what is happening with rates and quite frankly, why they're not lower. So when we take that and move it forward to the Fed discussing now another rate drop, which inherently the only thing that the Fed can do at this point is actually really go negative. They are essentially 0 at 0.2. They're not 0 all the way, but effectively it's there. So we'll be actually looking and talking about negative interest rates. And the question becomes, can the government inherently sustain a negative rate? Because what occurs there is that they're actually going to pay you to have debt. So you make your $5,000 debt payment, right, as a bank, and now the government's going to send you $400 on the back end of that. How sustainable is that in culmination with what we're already doing with all of the checks and support? And don't get me wrong, I love the idea and concept. We need to get through this, and I fully believe that it is a short-term component. Now, doesn't mean that we won't see a secondary cycle to this whole piece, but when we look at what has occurred historically regarding recessions versus what is currently actively happening, it's all been a relative human element, and whether it was a bona fide error that created a massive collapse or just blatant fraud and illegal activity that has resulted in previous recessions, this particular one is completely outside of any human's control or ability. So when you talk about, are we at the lowest lows? Unfortunately, you're never going to know until the peak is, or the valley is set. So it all becomes, does it work well for your strategy? And is it the best thing to be able to provide and prove direction for your financial plan, right? And hey, look, if we either, I don't want to say got it wrong, because I don't think that we got it wrong. We did what was correct during the time. But I mean, hey, look, if this thing does occur and it does go to 2%, okay, great. Then we got to refinance again. And now, because you purchased so early, or you did your refi so early, you don't have to worry about that. Well, I've been paying my mortgage for 10 years. I've paid $100,000, and now I really don't want to extend back out. All of that kind of goes away. Hey, look, let's just refi right away, capture that new quote unquote lowest low that we possibly can, and move forward. And let's make your businesses, aka your rental properties, your future, your 401ks, your real estate 401ks is really what I like to refer to it as. And just make them that much more profitable long term. Cameron, did I hit both points?
You did. You did, I believe so. Thanks, Robert. Hey, the next one. It's hard to gauge these nonverbals, right, when we're not in the same room. The next question is for Shawn Bowen. So Shawn, how are y'all handling it when folks are not comfortable with you coming in the house? So specifically dealing with home inspections, showings, how are y'all handling it when they're like, hey, whoa, coronavirus, not sure I want you in the house?
Man, just let me in the door and sell the shit. No, I'm kidding. Nah, so we're actually I would think we're doing pretty good about being respectful of it. I would say majority of our clients are older, right? So I actually went to, it was a contract signing the other day, and they sat in the garage. I sat outside of the garage, literally within, like, the guy had a tape measure. It was like, this is 6 feet. I was in a chair, and actually it was like this makeshift chair. So I would think if we can't do it that way, we're actually exploring to do virtual, right? We're trying to play with like the Zoom setups and having a video to send to that person, right? How to use Zoom, or if they're on an iPhone, and how do you do FaceTime, right? And I would say majority of the time right now, we're still getting in. We're not having too much pushback. Not too many people are barking, but the older crowd for sure is not comfortable. So we're trying to be respectful of that and try to work with them. And definitely, you know what I mean? That's our biggest issue right now. I don't think is viewing properties. I think it's just getting past the fear. Like, it's the fear of the unknown, right? And most of the time that's the issue. We haven't gotten anybody telling us any crazy shit either. Like, I can't believe you're calling during this coronavirus thing. I saw some people talking about that. None of that's happened yet, right? And it's like, I don't know who's bringing that up, if they're trying to start some shit, but that's not going down. None of that's happening. So yeah, I think right now we're probably experimenting more with the virtual than anything. So that's our answer to it. If we can't go, we're trying to do a virtual. And then our guys are being respectful about maybe not going into the house if they don't have to, but obviously try to get as much view of the house as you can. Hopefully that helped answer that question.
All right, thanks, Shawn. So the next question we have is for Macon. So Macon, have you seen any worries from tenants? And if you've seen any worries from tenants, if so, how are you dealing with them? How are you making them feel better? Not really specific about what the worries might be, so just maybe worries in general.
Yeah. I'll answer it two different ways because I'm not sure what they mean by that. If they're concerned about as far as can I pay the rent, what's going to happen to me if I don't pay the rent in these times where I maybe not be able to go to work or don't have steady income coming in, we've just advised them, hey, pay what you can. If you can't pay, let us know when you can pay. You're not going to be booted out right now because you're not paying rent. We understand what's going on in the world right now and everyone's having difficulties. So, just do the best you can. We'll help you the best we can. The owners are actually trying to support the tenants in these times, and we'll just all work through it together and try to come out on the other side. As far as if they're worrying about the other part of that might be showings or if we're renting property or any of that stuff, we're just telling the tenants, hey, basically we're not going to show the property if it's still occupied, if you're still in it with fears of this virus. If you have that fear, we've kind of shut that down. If it's a property that's vacant and our rental agent is showing it, we've got her instructed to, just use booties on your feet, gloves, hand sanitizer. She carries around Lysol, the antibacterial wipes. With the folks that she's showing it to, she'll kind of just, before they go in, she'll keep her distance and say, hey, if there's anything you need to open, anything you need to look at, I will touch it. I will do it. We'll keep our distance while we're in the house, and just tell me what you want to see and what you want to do. And that's the best we can do right now. We've told the owners just to kind of three-prong that. We told the owners the same thing. If your house is occupied, be prepared not to be able to market it right now until it's completely vacant. And that's just unfortunately the way it is. So that's kind of the way we're handling those issues.
Okay, thanks. So we have another question for Shawn Cowling. So Shawn, are you worried about any supply shortages, specifically changes in prices and the time it takes for renovations? Or do you think we're in a good position in related to time for renovations, changing prices and supply shortages?
Last week, a supplier, it was a smaller supplier, said something that he was having about a week longer lead time on certain things, but that was a smaller supplier. I have not seen any changes at all as far as like the big box, Lowe's, Home Depot. I use Builder's First source a lot. They haven't said anything. The prices have stayed the same. Again, I have not seen it yet, and I have not heard anything about it going up. So it's not come on my radar yet, but I got a little bit of a suspicion of it, like I said, about a week ago, but I hadn't heard any more about it. Honestly, looked like some of the big box guys had done some inventory switches here recently, and everything was on clearance. So I don't know if they're just trying to push material out and trying to clear their shelves or what. But again, as far as a flip, I was kind of picking up stuff just because it was on clearance, just for future use. But I haven't heard any long-term effects on it as of yet. So to be seen.
Okay, thanks. Let's hop back to Macon again. So Macon, do you think there will be an influx of rentals as they did before during the recession as lending rules tighten up? Sorry, I got a little tongue-tied at the end there.
I mean, it's certainly possible. Right now, as Alex alluded to a few minutes ago when he was speaking, we're seeing kind of folks are starting to sell their homes, from the last recession when they bought homes and they couldn't get out from underneath of them. Now they're able to sell them. So we're seeing a lot of that. But as far as an influx of rentals, yeah, that could happen for sure. It's no way to really tell, I guess, right now. But if investors are purchasing, homes, duplexes, what have you, then yeah, we could certainly see an influx of rentals coming in and folks trying to grab that share of the business. So it could happen, and we're trying to prepare for it the best we can and make sure that we're prepared to handle it just like everybody else, I think.
Okay, thanks.
So, and kind of on that note, I will say that our company, Coastal Group, kind of honestly got started.
Yeah.
Basically because of 2006 recession.
Yep.
We had a lot of people who bought homes that could not sell it. And so Glenn Russell, our broker, started basically helping them manage their homes. I don't think it was out of him wanting to be a property manager.
Not at all, man.
But it was out of the necessity of people needing to have someone manage their homes because they couldn't sell them. And as you know, we have that military community here. And so if they buy and they overbuy, guess what? They can't control if they got to move.
Yeah, they're stuck with it.
Yeah, so I think Macon over there is in a really good position. If people overbuy, they overpay, and they can't sell their homes, then they're going to need to rent them out.
Well, people always ask me, they're like, do you think it's going to get slower? I was like, honestly, it just never really does because we are in a good position as a rental company. That's always I think it just seems to sustain. And as you said before, that's how we got started. So, it's a pretty good spot to be in as long as you're doing it right and doing it the right way.
Okay, so I think I got a question for everybody on the panel. So whoever would like to step up, y'all can chime in. So I think there's a question. I think everyone was expecting a contraction in the near future, but not necessarily due to a pandemic, right? So what are y'all thinking about the prospects of another contraction following COVID-19? Do you think there'll be enough of a market correction, or do you still see another contraction to follow?
I think that's going to be answered. Robert's going to be able to jump in on that because he's got that pulse on the mortgage market stuff. But I'm talking about from experience back in 2010 where you didn't get this high and then low. There was a massive drop, right? And it took a long time to creep back up. So this is going to be something I don't think anybody's ever seen. I don't know if that's going to be a thing, talking about if it's going to bounce back, right? Or, market correction for sure right now. But then I think Macon, Robert, you said something about it, right? Where it was going to, maybe it's this massive fall off for a quick second and then this influx of money from the Fed, and then it just pushes everybody off the cliff for the final. And now you're starting over. That's how I feel. That's where I feel like it's going to go just by watching in the past and now watching this. I feel like we're at the edge of the cliff. We're just teetering on the edge. We're going to be hanging right there. They're going to throw some money at us, and then all shit's going to fall off the hill and then at the end of the summer. That's what I think is going to happen.
Dark shit out there, man. Come on.
I feel like it's been mostly somewhat of a doom and gloom side from my aspect of it. But really, guys, we're not even discussing drops in equity. We're not even discussing home values going down. That doesn't even hit the radar of the experts. Are there people asking the question? Yes, 100%. But the mortgage industry and the real estate industry is built completely different than it was from the housing market collapse. A lot of what occurred, and don't get me wrong, there's never one thing that ever, there's no one instance that was the reason the airplane crashed, right? It's a series and sequence of events that led up over a period of time. Aircrafts crash much quicker than 9 years worth of market, growth does. But the back end component was there was a lot of, hey man, I need that extra $50,000, $60,000 for that new Beamer I saw at the dealership. I'm doing a cash out refi. Can you help me out? You know, and the appraiser was like, yeah, sure, why not? The house across the street just sold for $400,000 when we're looking at it as like a 900, square foot shoebox, for lack of a better term. That's not occurring in this particular instance. There's already been all these other previous rules and regulations. There's some commentary about the Dodd-Frank Act right now that we can dig in a much deeper conversation, but the basis of everything that was put into place is actually and fundamentally working here in this particular instance. So when we look at the going forward and are we going to see another market contraction? We will, because people are contracting themselves. Am I going out as much? Am I spending as much? Am I doing this? But here's the beauty of the situation. And as long as the projection still holds true that this is a relatively short-term lived component that we all have to deal with, then we'll talk about, the second rebound potentially coming back as we learn more about the virus and what's all occurring. But the reality of the nature is that people are getting better. The tolls are and numbers are going down after a few months of the initial insult of the infection. So when we talk about those things, it's a pause button. We push the pause button. So the economic analysis is we're looking at somewhat of a V curve, or actually really more of a U-shaped curve, right? So we'll come down very quickly. We'll stay down here for a little while. People will start going back to work. Jobs will start happening again. Consumer expenditure will, occur. And now all of a sudden we're going back up just as fast as well. And that's the hope and want and wish. As the medicine's testing, all this stuff gets better. We'll find out how long that bottom of the U-shaped curve will anticipate. And then do we really truly look at more of what they call an L-shaped curve, which is what we saw coming out of 2008 and 9, is that you just had a strong fall and then it went flat for essentially until about 2012, 2013 before we really saw it. So it was a 3 to 4 year time period. But when you go back and you look at the historic data numbers, okay, when we look at what happened in the market, rates stayed relatively high until the HARP programs came in and until some of the government really stepped in and started preventing some of these, issues, or not necessarily preventing issues, but allowed and gave options to people to continue to carry on. So the question is, can you carry on now and today? Or can you, by diversifying and maybe taking cash out and purchasing other properties, being a little bit smarter with your investments, being a little bit more patient? Those are all those kinds of things that we still have to measure and figure out where we're going.
Nice. I want to interject in that just a tad bit. And I think kind of honestly just pushing off of what Robert is saying. So I think everybody tries to compare what we're seeing to the last thing we saw, right? We pretty much everybody in this group only saw our last up and down, if that. And I think it's very different because I bought at the very end, I guess it was 07, which sounds really stupid now that I look at it. But what's crazy is the house that I bought was $250,000 or $230,000. And when I bought it, when it was sold last in 2000, right? So from 2000 to 2007, that house was $50,000 in 2000. So it went from $50,000 to $230,000 in 6 years, right? Those numbers I showed you earlier, median price, 223 to 270. Yeah, they're jumping up, but it's not an insane amount like what happened from 04 to 06. Do I think we're going to have some kind of recession at some point? I think it's somewhat inevitable. I mean, all the economists are smarter than I am. So yes, I think that's going to happen at some point, but I don't think it's going to be the same dynamic that we saw in 06. People are way smarter. They're way more educated. Lenders are way more strict. Now they're starting to get a little lax, but guess what? Like I said, there's that auto correction that just happened because of the coronavirus. They're getting nervous, which means they start being, oh, I don't know if I want to just give everybody everything. So I think that's honestly going to help our market from just being stupid. So the kind of like just everybody getting loans even though they shouldn't. I think that's not going to be as big of a factor. And I think our population is pretty educated right now, but something that I skipped my last slide when I did this, but really the thing is, and I put it, everything I ever talk about is buy right. Guys, we're in Hopportunity investing, and Shawn's laughing at me right now, but it's because he knows the exact same thing. If you buy right,
I'm not laughing at you. I'm with you.
If you buy right, you're fine, right? You might run through some hard times, but you can at least run through them. So just be smart, be vigilant. And even if we do have some kind of up and down and up or whatever the hell it's going to be, you'll be able to ride it out. So, listen to the people around you that actually know what they're talking about. But if you buy right and you surround yourself with educated people in the real estate world, I don't think it's a time to just stop doing business. And I think everybody here would agree that nobody here is going to stop doing business. They're going to maybe change. They're going to maybe position themselves differently. But if you buy right, if you position yourself right, you're going to be fine. I don't think this recession is going to be quite as bad as it was, but it could be. I don't know. But guess what? Don't buy stupid. If you buy really stupid, this is going to be a really bad recession for you, even if it's not that bad of a recession. So I don't know. I think it's just, we have to, I don't think it's going to be quite as bad as what happened in 06, where it just dropped off like a cliff. And because we have the Hampton Roads area, like, we didn't go quite as fast as everybody, and we didn't go up quite as fast as everybody. And that's why our numbers aren't much higher than they were in 06, because our numbers right now are more realistic than they were in 06. So I think that, yeah, we've maybe been a little bit inflated, but not to a point where it's, they're unrealistic numbers. So I don't think the drop's going to be quite as significant as people think. And if people stay smart, I think they can ride this out.
Do we have anybody that's joined the group on the actual Zoom that wants to come on and talk, or any of that stuff? I know we got some people back there helping us with the tech side of things.
Well, this was my question. I ain't gonna lie.
Go.
All right. So my question for all y'all on the panel is, so most, if not all of you, have portfolios or a pipeline of rehabs or wholesale properties, or maybe all three. So what are you changing with your own business or your own personal portfolio?
I'll go first, if everybody's okay. I'm looking to go more creative, right? I'm looking to be better with the owner finance, subject to stuff that is a little bit more creative to build that portfolio. And then to the ramping side of things, marketing wise, we are definitely doing more marketing for sure. But that's how I feel like from my side of the house, of what I'd like to do. I'm not as heavy in rehabs, and I'm more focused on JVing on rehabs than I am doing the rehab. So putting the money in play. And then of course, the buy and holds. So, and of course, wholesaling, always marketing to find the deal. Hardest part of the game, finding the deal. That's it for me.
Come on, guys. What else y'all got?
Sure, I'll go. I personally am prepping and getting ready for, still purchases in my own portfolio. I'm still working on varying things to better my own particular property, just so that I can build that equity. And I'm not anticipating anything to fall. And that's why I'm still looking to buy and rehab. I think that probably my main focus and direction has changed personally, to the point where, okay, if I'm going to buy this property and I am going to rehab it, if I get quote unquote stuck with it, right? Like my profit margin didn't work out. Am I still going to make enough money on the back end to cover my bills and rent and let this brief moment in time pass? Because that's truly what it's going to end up being. This again isn't tied to human error. This isn't human element that created a recession. It's all about the pure impact of a virus and a sickness on our community. So I think that it's a great and excellent time to be very smart, be very prepared, and very ready to capture an amazing deal at a ridiculous time. It's out there, and people are probably going to be a little bit more desperate to make that that sale and that transaction occur. And just kind of what Shawn had said, getting more creative with your deals and being prepared for that back end, and looking for those different opportunities of owner financing and those other types of things that can position yourself to be that much stronger when this does turn back around, because it really will.
Okay, so kind of to piggy, I mean, if you guys still want to answer the same question, but kind of to piggyback off that current question, are you currently looking to add to your personal portfolio right now? Are you buying right now? And that's from the gallery. That wasn't from Cam, but I'm curious too.
Yeah. I'm super honest with everybody in this group. And dude, I'm in real estate sales, and I only make money when I sell houses. So I'll be dead honest. I've got 3 kids at home that I need to make sure I got enough money to feed them, and they're starting to eat more. I'm like, man, they haven't been eating for years, and now they're starting to eat like crazy. So I'm always looking, man. I think everybody in this game is always looking, but I'm going to be very, very stingy on what I'm going to do a deal with, but I'm probably going to look even harder. I mean, I think it's more of, if you're in the game, you're going to look even harder now than you were before, but you're just going to be that much more stingy on what you accept. Like for me, I think it would be, if my sales business slows down where I can't maybe work as much on the showing side, then maybe I do a rehab, because the construction world seems to be having I think, to me, it seems like they're going to try to keep pushing construction. So if I do a rehab, then I'm kind of working towards that construction world. I don't know, but I think I'm going to, these next, probably week or two, I'm probably just going to be filling it out, like regardless. But I think I'm going to be looking even more than ever, because like we've all said, if people have a fear mindset, that's when they get rid of stuff maybe sooner than they should, or maybe for less than they should. And that's when you should buy, and that's when you can buy well. So when a good opportunity comes, it usually doesn't come at an opportune time, except for if you're the one to be there to grab it,
So I was going to piggyback off of Alex. So I'm not one of the real estate professionals they are, but they are there to advise me if needed. And the question about refinancing was awesome, because if I get my interest rate lower and I can get my payments lower on the properties that I already have and am buying and holding, now I have the opportunity to look at these people that are trying to get rid of their properties and buy them low. So if I'm buying and holding and something happens with my job or my husband's job, now I have this whole other income because I bought correctly and freed up cash when these interest rates did drop. So I am on Alex's point of view, where I'm not jumping the gun and buying the first thing that comes up, but I am looking and buying smart, because people are going to try to get rid of things.
Thanks, Vanessa.
Good talk, guys. Good talk. I'm digging it.
I can tell you, I was just trying to find it really quickly, but new construction starts actually are still increasing. And even as we go through this level of uncertainty, the guys who are building brand new, they're still doing it. They're still rolling, because again, I think everybody circles back to, we just have to be a little bit smarter. And I think that's going to be the big dynamic that comes out of this, is just the level of intelligence that we all gain as investors, and making sure that we're not just buying in that blind faith that, all right, cool, I can turn this around, and the market's increasing in equity and all that. We're looking at so many other levels of alternative forms to ensure that our investment is smart And that's the biggest component, guys, is just making sure you take the time to talk with the people who say, well, let's talk about your portfolio. Where are you going? What are you doing? What's plan B? What is plan B? And that's what I don't think ever occurred in the past and in history, particularly when we reference the housing market collapse. There wasn't a plan B. There was just, I live in this ridiculous house and I paid so much money for it, and come and check out my beautiful oven range and hood that I bought from Viking for $20,000. It's just not what's going on anymore. People are just accepting the fact that I need a good quality product that is sustainable, and I'm going to build long term. This is not day trading. We're not trading, properties every single month to try to make, a quick buck on the stock market. We're doing this for our longevity. And that's really what you guys need to think about, and the biggest focus you guys have to have going forward.
Okay, I'm kind of circling back around to some questions that I passed over. I don't want to pass over anybody's questions. So I got one for Shawn Cowling. Are supply prices going up? Will my flip be more expensive if the product price goes up? And should I be looking at less expensive finishes? What are you doing, Shawn? And I can repeat it too if you want, man.
No, you're good.
All right.
I got you. No, like I said, I have not seen prices go up as of yet. One of the suppliers last week said they were just having more lead time on a certain stuff, but the prices were still the same. I'm not sure why that was, but again, finishes wise, I don't know. I hadn't seen anything to make me want to change the finishes. As far as flip properties and stuff like that, I've been, middle of the line stuff for years, and it's just kind of, it's still there. Nothing's drastically changed to make me change anything as of now. But again, watching everything, and I know it's still early in this pandemic, so still trying to just keep an eye out kind of every day to see if the big box stores are dropping stuff or if it just kind of stays the same. So.
Guys,
okay. So just one more, Alex, and then we're gonna wrap up. But just to close it, this question actually came in first, but I thought it kind of wrapped it up, so I kind of saved it for the end. So, and I think a lot of the panelists have answered this, but if you haven't, feel free to chime in here. So during this time, what paradigm shifts are you all recommended, and what should you not change? So the grand scheme, what would you change right now, and what would you not change? And I think we've heard from, not to call you all out, but I think we've heard everybody's kind of answered that, except for maybe Shawn Cowling and Macon. What would y'all change?
Go ahead, Macon.
Well, I don't know, as far as what we do in a whole and what we would change right now, not much. It's for property management's a unique, funny business because not everything affects us like it may affect everyone else. We're always kind of steady is the race. We're kind of just chugging along and we're not impacted as hard. And it's, a lot of it has to do with the area where we live, the military here, and people always coming in and out. And so if sales is affected, we're not affected. If some other side of business is affected, we're not affected. So we don't make a lot of changes with our business and how we work. If that's the question, and I'm hoping I'm answering it. But I don't plan to make a lot of changes with our company and how we're moving along. This whole thing, as far as COVID, it has changed the way that we can work and how we can be effective working from home and not having to be in the office all the time as old traditional ways would say with property management. But not a lot of changes for us, man, honestly.
I think honestly, it's kind of helped you guys.
Yeah, it has. You're absolutely right.
Promote the stuff you already wanted to promote.
I've been trying to push this stuff with you. I mean,
it's cool.
You and I know for years we've been trying to push this thing, and we get traditional pushback from older I said older heads, like, I mean, I got brokers and folks who've been in the business for a long time, but it's actually enhanced what we've been trying to do, and now we're doing it. So it's actually a breath of fresh air.
Okay, so just to wrap up on a lighter note, just going to kind of go around the room, and I don't know how everybody sees it on the screen, but I see Robert, Shawn Bowen, Shawn Cowling, Macon, and then Alex. So it's going to kind of go in that order. What are each of you drinking? And one last piece of advice as we part ways. So Robert, please.
Mine is made. It's a nice amber, made and distilled by Woodford. Not your typical brewery. I ran out of beer, guys, and I didn't go out. So one thing I've changed is I'm not going out for beer. We'll drink what we have in the liquor cabinet till it's gone. Piece of advice for business-wise, guys, if you're talking to people, particularly obviously in the financing world, and they're not asking you what your long-term strategy is, and they're not asking you, you know, where do you see yourself? Where are you going? Do you have plan B? What's your rental strategy? Have you evaluated this property based upon the fact that, particularly again from the military side of things, if you're going to relocate, can you at least cover your bills? And then you need to call a different person, is what it boils down to. If they can't show you amortization schedules and break down the amount of interest that you're going to pay back, and can they really go in depth and explain the mortgage products, my best piece of advice is call somebody else. If they answer the phone and say, what is your social security number, date of birth, you're talking to the wrong person. You need somebody that's going to get to know you and get to know your strategies and long-term goals, because it's going to be inherently and significantly the most important thing that you can possibly do at this point in time is positioning yourself in a smart manner. And I think that that's a relatively redundant component that I think everybody has touched on, is what can you do to position yourself the best way possible? And that's really where you need to start.
Thanks, Robert. Shawn Bowen?
Up.
Yes, sir.
All right. I've gotten through 3 different beers, and I've had the Hoplandia out of New Realm. I've got the IPA, and then the Hoptopus. So
That's my jam.
3. Those are the 3 that I've enjoyed during this meeting, which has been awesome, guys. I appreciate everybody jumping on here.
Beaver Beach.
To hang out, right, and share your experiences, because that's what this whole Hopportunity thing is for, and that's what we do when we do get together and get live, and I really enjoy it. Sucks I got to sit here on this computer and drink this beer by myself, but it seems to be life right now. So I think to like walk away from this thing and what to say, listen to the guys that have gone through this business, be around them, surround yourself with them, listen to their experiences, heed their warnings, be very, very active or proactive to what they're saying, and listen, right? Shut up and listen. Like, we're the young group. Like, listen to the guys that have gone through this shit, man. Their experience, they've seen it and multiple times over. My only one major advice is like, don't stop, right? Know your numbers, stick to your numbers. That's where the game is. You make money in real estate when you buy, not when you sell. That's a long life lesson. That quote has been something I've lived by. And I'll definitely go with Robert and his statement of making sure that those people that are helping you advise you care in your best interest of long-term, not the play-by-night guy, like just swinging in for the weekend and being like, make a buck off of you and he's out. This relationship is long-term. These portfolios are long-term. You're building your wealth for legacy, and pay attention to it, right? Be smart about it. Do smart plays. And at any point in time you have a chance of helping somebody because of the knowledge you have, do these kind of things and help them. You're only here one time. Take some time to help somebody else. You're never too good not to. That's it for me.
Oh, yeah. Shawn Cowling, sir.
To my unmuted.
There we go.
There you go.
So I have switched to a tasty Jim Beam cocktail because I ran out of beer. So I appreciate the opportunity to hang out with you guys for the night and enjoy beers online. So it's been good information. Appreciate all the info. Looking forward, it's just like you guys said, just keep working. I have a feeling it's an opportunity to find some deals, and just maybe make a little money on the back end of this. So just keep working, keep looking for better deals, and just go with it. So you guys are kind of my pipeline to stuff like that. So I appreciate always talking to you guys and getting more information. I talk to Bowen a lot. So yeah, he's my side of that. And then I look forward to speaking with him in the future. So good luck to everybody.
Awesome. Who was the next one up?
Macon?
All right. I've been drinking bourbon all night, so I probably got more loose as the night went on. But
yeah, let's go.
Gotta love it. No beer tonight. But no, I'm piggybacking off of what Shawn and I think Robert said. You know, just know what your vision is, know what you want to do and what you want to accomplish, and then align yourself with like-minded people like that want to do the same thing, that have the same goals in hand, because that's how you're going to succeed. You know, just a true example is, you know, I think Alex, and I work with Alex, I'm always touting him, but he is one of those people that when you talk to him, you know that he has your best interest in mind, and he's going to tell you, you know, either this is no good, or I don't believe in this, or, you know, maybe this or that, but it's always going to be the truth. And it wasn't until I linked up with Alex, I started realizing my own vision, which I always had in mind. I just couldn't get it placed properly until he came aboard, and he was like, we're going to, you know, no one wants to listen to you. They're going to listen to us. So it's kind of worked out that way. But, you know, be proactive with what you're doing, anticipate for the future, know what's happening out there in the market, you know, whether it's sales, property management, whatever, but just know your damn craft and don't walk through it blind, and know what the hell you're doing, and listen to people that do know what they're doing, and you'll succeed, or you'll be the best success that you can vision yourself as. That's all I got.
All right, Alex. Good, sir. Please wrap us up.
Yeah, man. Thanks, guys. I am drinking Commonwealth Brewery. So that was actually the first place we had our first meeting. And so
Alex brought his own cake.
Yeah, went by there. What? It's a large cake.
Brought your own cake.
You got a 6-barrel over there.
Size of the beer I wanted.
He brought a 40.
It's just one beer. So yeah, no, I think you know, the cool thing is when you hear several people say the same thing, you should probably listen at some point. And that's kind of my rule of thumb, is when I hear a lot of people saying the same thing, I try to listen. And you know, I think Robert Hill kind of jumped on that right out of the gate and said, who has your best interest? And work with those people that have your best interest. It's tough as an agent to tell people that's not a good house to buy. I think even ethically, I'm not even allowed to say that sometimes. I'm not allowed to say you're not allowed to buy in this neighborhood, but you know, there's ways. But
get around that bullshit.
The reality is, man, like, what is your freaking big plan? And then does that actually fit in your plan? And even when times are tough and maybe the numbers aren't as good as
the last one wrapping up, they all had to do their little wrap up.
Yeah.
Sorry, that's me. Husband's cooking dinner. Sorry.
Even if things aren't as good as they once were, like, if your plan is to accomplish this and your numbers need to be this, then kind of stay within that realm. They're going to change, they're going to adjust, but know what that long-term vision is, and then move around within that. And by moving around, work with people you know that are going to take care of you. see what opportunities are out there, stay educated. And what do you think I'm going to say next, Shawn? All right, somebody. You're going to buy right, man. Just freaking buy right. And you can survive anything. You can thrive in anything. And, that's what I want to do personally. That's what I want my clients to do. That's what I want everybody here to do. And this is awesome, man. I'm so excited. Like, this is a shitty situation we're all in. But I've got several people around me right now that are smarter than me and know things that I don't know. And that's where I want to be when I'm trying to make real estate investing decisions, is be surrounded by people that can help direct me in some manner. And I don't know. I think for Hopportunity, I'm just going to try to conclude this, which I'm not very good at doing. Trying to get better. Surround yourself with good people, get educated, and have fun drinking local craft beer. Hey, support local. Thanks, guys, for joining us tonight. Especially panelists for coming out and supporting us and sharing your skill, your expertise, and your time. And, hopefully you guys enjoyed it. Please continue to leave some remarks on Facebook. Let us know what you guys want to know about. These times are changing like crazy. So please share what you guys are thinking. Share what questions you have. We'll reach out, try to find speakers, try to find information. Shawn.
One last thing, guys. We've had two ladies on here helping us do this entire thing, and we don't operate without them in the background. So thank you, Vanessa, and thank you, Ashley, for helping us, make it look like we have an idea of what we're doing. So
we don't.
And it's all because of them, guys. It's like we say, it's a group, right? So all this kind of stuff happens because they allow or help us allow this to happen in a very organized way and not chaotic and looking like a bunch of clowns doing it. So thank you, ladies, for putting in time and jumping on here with us as well and helping us always keep this stuff together. I really appreciate your time and efforts as usual.
Thanks, guys. Thanks for joining us. Let's go ahead and close out so everybody can start getting ready for bed and the real life stuff we got to do.
Life, live it, drink it. See ya.
Peace.
Here, guys.
No sleep in Brooklyn.
All right. It's stopped.
Woo!
All right.
Very nice.
Hey, that shit was cool as fuck. I don't care what anybody says.
That was good, man. That was cool.
That was cool. Guys, thank you for jumping in here and spending the time. I know we usually get to do it face-to-face, but hey, we got to do what we got to do while we make it happen, right? So thank you for enjoying all you guys talk. It's awesome. And that's the other thing for these is that we get to learn stuff too while you guys are in here from everybody's perspective. You know what I mean? And
Thanks for having me, man. This was a blast. This was a good time.
Awesome. Hopefully next time we do these things, you can come check us out when we're live. Like actually,
guys, you actually sounded like you knew what you were talking about, man.
Yeah, we front sometime.
I won't tell nobody.
Maybe
I'll show up to more meetings.
He said that Alex brought a keg. That shit was hilarious.
That was
Macon, wait, where's
Thanks,
Macon?
Cameron. You're making me look like an alcoholic.
When you first showed it earlier, I thought it was like a Ford Loco. I was like, man, Alex is